What is good, everyone? Welcome to today's lesson of the day. Today's Thursday, May 8th, 2025. Today, lesson of the day is going to be recognizing market conditions and then also rating setups. So, first off, guys, just again, with recognizing market conditions, this is just important because, as traders, our main job is to be able to preserve the money that we make, right? At the end of the day, we can all make money in the market. It's not hard. A lot of people can just click buy and sell at any point in time, right, and make money, right? Even with with the 70% win rate, even with a 70% win rate strategy, right? You can click buy and sell. You can make money. But those three losses that you take, right? For example, with 10 trades and a 70% win rate, is going to be times where you need to be able to preserve that capital and see if the conditions are either on your side, and then if that was like a good loss, or they're not on your side and that could have been avoidable. So in this lesson, I'm going to kind of go over how you can kind of first predict that, because it's not really true. There's a lot of I guess misconceptions out there that it's like the main thing I hear people say with like consolidation ranges and stuff is like you don't know you're in a consolidation until like you're in one. You don't know a consolidation is happening until you're in one, which is not true. There are ways to predict consolidations, just with AMD and that sort of stuff. So let's get into that. All right. So first off, with recognizing market conditions, the first way you can kind of expect us to have a choppier session is if we have SMTs on either side, both at your key levels. So if we have, for example, like previous day high, right, and previous day low, we have like a super obvious range. We have a super obvious draw on liquidity. Now, again, I don't want you guys thinking like just because there's a lot of the times we have an SMT, for example, at like this low, and then this low will be like the stronger pair and stronger asset, and then usually like when we go towards this little internal high here, there'll be an SMT, right? So not mainly this internal high is what I'm looking at, but what I'm looking at is just like the overall draw on liquidity, right? If we have hit that draw on liquidity, then that SMT is there. And there's an SMT at the low, and then we start like just getting SMTs on both sides constantly. It's just not going to be favorable conditions. Not only that, it's just going to be harder to kind of determine your draw on liquidity and determine your bias. A lot of the times when you're trading, and this is what I'm always telling you guys, is if the trade is not like so freaking obvious to the point where you're like, I'm literally stupid if I don't take this trade, then you shouldn't be taking the trade, right? If the draw on liquidity is not there, not obvious, don't take the trade. And a lot of the times when there's SMTs on both sides and we have a lot of conflicting, bias with just because of that SMT, very oftentimes I'm going to be staying away from the charts and I'm going to wait for one side of that range to get invalidated. I'm going to wait for either, a nice pop up and, have some sort of condition present itself and something like that, or, break down lower, right? But either way, I'm waiting for something that's obvious, right? That's kind of the point of this lesson, really, is to just really wait for something that's obvious and not be trading and getting caught in choppy conditions like this. Okay, so another way you can kind of predict if we have shitty market conditions is if we have distributed over 300 points during the overnight session, taking the daily objective. 300 points is kind of just like a framework for me. Usually, if it's around 200 points and we still take daily objective, a lot of the times AM session is going to be bad. Okay, so this is just simply going off of what AMD is, right? This is how the market moves. We accumulate, we manipulate, and then we distribute. Okay, with AMD, especially after taking daily objectives, right, we start accumulating. Okay, so if we have, for example, previous week high, right, we have previous week high, and the overnight session just pumps and takes out previous week high. For example, if we did this in Asia session, right, we had previous week high today during Asia session, right, on this weekly time frame. We had a previous week high right here, right? And if Asia session would have taken this out, and we didn't have some sort of like run lower and something like this for New York to then go and take this draw on liquidity, then I probably wouldn't have traded AM session, right? Because the draw on liquidity was then just not obvious, right? After taking out one major objective, it's obvious that we're going to have some sort of like rebalance in price, which is basically what the MEC model is. Either after taking buy side or sell side liquidity, we usually do have rebalances in price to a 5 minute to a 15-minute gap. But most of the time, right? When we're taking out like very external draws on liquidity, just don't trade like price action really after that until we have some sort of accumulation, because that's what's going to happen. We're going to accumulate price, and then usually during 11 o'clock we'll clean up, and then 1 p.m. will also probably clean up. So be looking out for like 11 o'clock, because a lot of the times 10 a.m. we'll do something like this, right? And this is kind of what happened today. Obviously, it was a little bit different since we did have like Trump speaking later, but well, we'll get into that with like the next one. But yeah. Next up is seek and destroy conditions. So seek and destroy conditions was something that I was gonna go over for daily profiles, right? But I thought I'd just go over it in this lesson. It's when we have Asia session, London session, New York, right? So if London session takes out Asia session's lows and highs, it's most likely that New York will do the same thing, and we will take out London session's highs and lows. And this just kind of gives like back and forth price action. And although at first it might seem enticing, like, oh, you can just target the highs and then the lows, but it revolves around like really just like stop rates happening all in New York session. Like we'll just do some shit like this, and like every time we make a high and low, we're just running those highs and lows. And it's just not ideal conditions. These conditions usually do happen on days like no news Mondays, right? When we stay consolidating between range, like just range bound days, like no news Mondays. If we have, day before NFP, day before CPI, those types of days, we usually have seek and destroy conditions. So all of these are, days that you should be like sizing down on at least, if trading at all, right? So that's just something to look out for, is seek and destroy conditions. And then finally, we have if high impact news is in PM session, or just, high impact news in general. You guys should always be waiting for high impact news to drop before trading, especially during AM session. There are times where, I'm still like going live during AM session when we have high impact news and PM session. Usually that's just because I do have like stuff to do later on my day or whatever, right? But there are times, of course, you're going to get like clean price action AM, and then PM's going to, still have news. But 90% of the time, it's going to be pretty choppy conditions, and just conditions you want to stay out of the market for. Why? Because we are generating liquidity, right? So, for example, we do this really all the time with 10 a.m. when we have like news later, and sometimes just on like choppy ass days, right? This is something that you all should be paying attention to, is when we start like generating liquidity, right? So like during AM session, for example, today, we started generating liquidity, right? We weren't taking out these highs, right? We have all this low resistance here, all this low resistance liquidity. And we did the same thing during 10 a.m., right? So if we just go from like the 10 a.m. candle here, and we mark out what 10 a.m. actually did. And now I didn't capitalize on this trade because there was no entry for my model, but we can just see like drawn liquidity wise why this was so important. 10 a.m. didn't take out any major high or low, right? We just generating liquidity. We're just generating liquidity, right? Leaving behind these highs and lows. So what we can expect, if 10 a.m. doesn't do anything and we generate liquidity, it is okay to trade past 10 a.m. and it's okay to trade 11 o'clock, okay? Generation of liquidity is always happening. If the 10 a.m. candle is generating liquidity, 11 a.m. will take it out. If 11 a.m. is generating liquidity, then 1 p.m. will be clean, right? And what happens if 9:30 to 11 o'clock, takes out a major draw on liquidity? Well, then the next session will probably be choppy, right? So you always have to, kind of be frameworking if you're going to be trading the next session, right? If at all, based on what the previous session did, right? So at this point, I was saying like, hey guys, I'm going to be trading PM session, or I'm going to be trading like past this. I'm getting off stream here, but I'm going to be trading past this, right? And I said that because there was still a lot of generation of liquidity. There was still previous week high still intact, right? So if we go on the weekly time from here, previous week high was still intact. And just the backtesting, not backtesting, this is just not showing it, right? But previous week high was still intact, right? So I can anticipate then past AM session to be clean, right? Since my drawn liquidity is still there. And what happens at 11 o'clock? 11 o'clock runs immediately all of the generation of liquidity that 10 a.m. did. Okay? So that's just things you have to be paying attention to with conditions. Is if we're not doing, you can just see like the lack of volatility in the AM session, and then once immediately 10 a.m. opens, we just rip higher, right? And just it's insanely clean price action, and that's just why you have to wait for time to align as well with price, right? Um, yeah, those are really like the four things that I look at when I'm recognizing market conditions. And again, guys, like this is so extremely important because as traders, we need to be preserving capital. Easy to make money. It's harder to keep the money that you actually make. And these are just things that I look for personally, so I'm not caught in that chop. And there's oftentimes you guys will see accumulation again happen when after taking out major liquidity pools. I guess there's three really ways to look at accumulation, and how do you know when the breakout of the accumulation is going to happen? That's like a question I get a lot. So there's really like three ways we can break out of an accumulation range. One is the way that's, I think in my opinion, the most favorable, which is we will break out of one side of the range. So we'll hit one side of the range, the external high, right? And this is also known as your AMD, your accumulation manipulation distribution. And then we will distribute lower. And this is something that you'll often see, and I think is the most favorable for the way that I trade personally. There's another way we can break out from an accumulation range, which is just simply like a true breakout, where we will distribute just through the accumulation highs, and then we will continue higher, and then leaving behind these accumulation lows, and this will come back to trade back to eventually. When we hit our higher time frame key level above, this will act as then a draw on liquidity to then go lower, right? And then the final way that we usually do break out of accumulation ranges is by raiding both sides. So we'll see a raid on the highs, and then we'll see a raid on also the lows, and then from there we will go higher and go towards our intended draw on liquidity that price wanted to go to in the first place. Right, so you'll sometimes see a break of both those sides, and in scenarios where we have a accumulation in general and manipulation distribution, you want to be waiting extra long for that confirmation, right? Because if we have, like, for example here, a PD array, right, you can expect if we invert this, like a gap here, right, to then go towards accumulation lows, right? But from here, these are just still going to be conditions, right? Because your draw on liquidity could still just be higher and you're wrong, right? So still have these being conditions, because if we break out of this, then this is most likely just going to be a run back up towards that high, right? And this is still like a valid setup. But yeah, that being said, that's how I recognize market conditions. That's what bad market conditions look like. And this is how you kind of trade those market conditions and trade the accumulation ranges. Trade it using time as well, right? Always be paying attention to time. Always be paying attention to, seek and destroy, session liquidity. But yeah, mainly time is going to be huge here. But yeah, you guys have any questions on anything I have here, really based on the rules that I've given? This is so much love, bro. Bitcoin 104. Oh my god. Holy shit. What the helly? 6% is crazy. All is clear. This one. So if there's a very higher time from key level that's tapped, then should we not look for a mech? That part sort of confused me. Yeah, that's a good question. So it depends on like time. So a lot of the times, for example, if we have something like this, right? You guys see this happened, I think it was this week or something, where we had 10 a.m. power of 3, right? So we had 10 a.m. have like an open low, and this happened on Tuesday whenever I was on a flight. I think it was Tuesday, right? 10 a.m. power of 3, and then we had like a very beautiful V-shaped recovery up, and we had a distribution towards some draw on liquidity here. I forgot what it was. Some external draw after that, right? And this was a very nice like V-shaped recovery that happened, right? And this was around 10:30, I think we hit it. And from there, right, I'm not really looking for a reversal past this, and not even a mech, right? A lot of the times with the mech model, you want to be waiting for, different sessions if we already like in that session have taken the objective. Does that make sense? Like for example here, if this opens 10 a.m., right, 10 open low, and then you're trading against like a 4-hour big ass bullish candle just to get a little retracement, it's oftentimes not worth it, and oftentimes we will have an accumulation, and it's just going to be slower volatility until when? Until 11 a.m. We'll probably have like a breakout, probably continue higher, right? If that was at 10:30, or if this happens up until 11, then probably 11 o'clock to 12 o'clock will be choppy. Then maybe you can get some sort of mech short at 1 p.m., right? But yeah, but for example, let's say we take this out, let's say this is like pre-market, we take this out at like 9:30, right? This happens like 9:30, and then we still have the rest of AM session, and we start getting, clean volatility. Clean meaning like we are inverting gaps, we are respecting gaps. We're not just like inverting a gap and then running higher. We're not, disrespecting this gap and then running higher. You want to be seeing price respect and disrespect PRAs accordingly to your drawn liquidity. That's how you find like clear conditions. Market conditions is what I meant, right? Clear market conditions. But yeah, from there, like reversals are definitely like possible, right? It all depends on like what that session has done though, right? Because if we have like distributed 300 points in like one session, the chances that we're going to keep having clean volatility after that and clean price action after, all that is very, it's unlikely. Can it happen? Sure. But is it going to be in our favor? And is it like, no, you shouldn't be trading that. How often should we be watching for the 30-minute power of 3? So I'm really just looking at my higher time frame for like power of 3, and then I'm also looking at lower time frame. There's really no like I'm specifically watching for one time frame, right? So I'm not specifically watching for a 30-minute. I'm not specifically watching for a 1-minute power of 3, right? It's always going to be on whatever time frame's like the most obvious, and where I can like see that accumulation form. Usually not trade if FOMC is on the same day. Yeah, so if we have FOMC and PM session, oftentimes AM session is going to be really choppy, so I probably won't trade AM session. But there's sometimes it is clean, so I still just hop on the charts to tape read and whatnot. But yeah, usually then I'll just trade PM session. I don't really recommend FOMC for beginners. I think it is something that is built through a lot of screen time, the way FOMC trades. Especially just PM session, liquidity. But yeah, it is just like an avoidable day. What if your 5-minute condition is the only entry of the day? Yeah, so that's a good question. I think what you're asking is like what happens when we only have made like if we don't even like make fair value gaps in that day, right? Like that's something you can also definitely do is just like by recognizing conditions. For example, all of AM session, I don't think we made one singular like 5-minute fair value gap. And you can just see, like, if we just don't make fair value gaps in AM session, what's going to happen? We're not having clean volatility versus look at what happens when we create all these fair value gaps. Oh, like instant delivery. We're like absolutely ripping. Beautiful price action, right? So it's a lot different. And that's, again, that is something that you should definitely be watching out for is, are we creating fair value gaps? And if not, you should just be stepping away, like 5-minute minimum, right? Because I feel like a lot of the times it's very easy to get caught up on like the lower time frames and be like, oh, there's like an A+ setup here, but it's like there's nothing clean on like higher time frame and like there's no volatility. Like that's how you really see if there's volatility. Yeah, exactly. Do you have any written guide on what kind of news to watch out for or how it'll affect the previous day before that news? Not entirely. I mean, I'm really just looking for NFP and CPI as my main two. Like NFP week. is usually better to. It's okay to trade on like Mondays. I do trade no news Mondays on NFP week. Um, and then the day before NFP is usually bad though. Um, and then CPI the day before CPI is usually pretty bad too. Um, but yeah, at the end of the day, I am a like lower time frame trader, right? So I'm not really trading on the higher time frame that much. So oftentimes, like mech model, if my model presents itself, then it's a setup that I'll definitely take. But if not, it's some sort of like continuation. It's usually something that I will go lower size on if it's towards some like extendo clip drawn liquidity, right? Because oftentimes, if we're just saving liquidity for the next day, we'll usually just generate that before that day. So that would happen in exactly. Exactly, Garfield. Yeah. That's pretty much exactly what happened today, right? So I'll show like the trade I took today in PM was just after we had this huge move in AM session, right? And like this was just during like that 11 o'clock candle. What can you expect the 12 o'clock candle to do? And a little bit after that is just have like a lot of accumulation. So I mean, really like these conditions are very hard to navigate through, right? Obviously, because it's just a lot choppier. I have a lot of experience trading these conditions, right, and just like lower time frame AMDs. So it was an obvious rebalance and it was an obvious mech model in my opinion, right? So we ended up distributing. We had accumulation during lunch hour, and then PM and like 3 p.m. cleaned up. But yeah, this was just like a rebalance in price. AMD on the lower time frame. But yeah, always be paying attention to time. Like what is price doing in respect to time. In respect to time. Yeah, so again with an AMD versus a breakout, right? So like a true breakout would just be like look like this, right? Where we have like accumulation and then price doesn't manipulate lower or higher and it just simply like breaks out to one side, and then you can kind of tell if that will be the true breakout if we start respecting these bullish PD rays to the left of you, and then disrespecting the bearish PD rays, and that's how you can tell like we'll have like a true breakout and then we'll continue higher towards wherever our drawn liquidity is. It's obviously not the most favorable. It's not like the best in my opinion because it's like a weird stop loss, but it does happen and it's something you should be aware of because it does happen. I can see yeah, so I don't care about a yellow folder, right? So when I'm looking at like for example news, right? If when I was saying if we have high impact news in PM session, if we have high impact news even in like the next day usually, I'm not caring about really yellow folder high impact. I mean red folder. So when you're going on Forex Factory, you should be looking at red folder news. That's what matters the most. Yellow folder will not have an impact or as much as an impact on the market. Yeah, especially yellow folder, like orange folder sometimes, but yellow folder doesn't matter. Yeah, again, but it's just by recognizing conditions, right? Like if we're doing stuff like this where we're just not, where we're literally haven't made like a singular like fair value gap, right? You can expect then 10 a.m. just be bad. Maybe 11 a.m. cleans up, right? Maybe this is 10 a.m. super clean, then just don't trade for the rest of the day. But yeah, most of the time, day before NFP and CPI, it's going to be pretty shitty. Yeah, Jolt's job opening is usually pretty cooked as well. 10 a.m. news just sucks, honestly. Like, I never... Unless there's like a data high or low, like it's made 10 a.m. news is always choppy. Ruins the flow. some reds are pretty ash. They're like NFCPI, PPI, NFP are strong. Yep, exactly. What do you rate the 5-minute IFVG after hit a 15-minute? At 155. We hit a 15-minute gap. Oh, the long? Nah. I mean, it's just like there's no external draw. Like I don't know why you'd be longing this. Yeah, I mean, two reasons I don't like this. Number one is because we already have taken out like external drawn liquidity here. So after we take out like an external draw and then we rebalance a range, that's really like all I want to see in price. Unless we start like doing something like this, where you have like a very clear like generation of low resistance liquidity on like the lower time frame, then I'll be like, okay, then this is an obvious sign of a continuation on the higher time frame, and then I'll look for higher prices, right? But if we have just done this, and then we don't really have clear LRL, and we just have very like basic structure, I guess. It's just not obvious enough, in my opinion. Even though this was a winning trade, it's just not something that I would personally look to take for those reasons. Like, just pay attention to mainly, instead of like having your entry, right? Like this is like a good entry, right? Like this in general, right? A sweep of this low, we hit this a 15-minute gap, and then we have a clear 5-minute inversion, right? Like mechanically, this is good. And mechanically, like, yeah, sometimes it does work, of course. But what's your higher time frame level? Like we already hit previous week high. So what are you targeting like higher time frame? When you can get alongside that trend, the price movements are just gonna be so much cleaner. And just a lot more obvious, and it's not going to be as much of a headache, honestly, like getting in trades like this. What do you mean? Because no external draw liquidity, it was already made. What's pattern trading? Can you show your PM trade again? Yeah, I posted in the recordings tab. I made a trade recap for you guys. But yeah, it was just a 5-minute bearish gap here. Tapped into it, and a 1-minute IFVG or a 2-minute IFVG with a unfilled 50-minute gap. Yeah, the long was just like, yeah, exactly. That's what like pattern trade means. It's just like you have, yeah, that's just what pattern trade means when you're just not aligning like higher time frame. Can you explain the idea of generating liquidity? Yeah, so what generating liquidity is, like the idea of it is basically for the markets to then target later on, right? So it's just resting stop losses. For example, when we have a high here, right? So the idea is essentially this, right? We have highs here getting generated, and the next high is not taking that high. We have a high here, and then the next high doesn't take this high. High here, next high doesn't take this high, right? So we just have this kind of generation of liquidity, and oftentimes when we have, this forming here, right? All of these resting stop losses, the market's going to move through it pretty fast and pretty quickly. And how you can kind of tell when we're in this kind of, these type of conditions is literally by looking at the higher time frame, right? And like looking at like my daily buys, for example. What's our like higher time frame key level here? Well, we have this 4-hour gap, right? So price is most likely, since we are bullish, right? And we did have this pretty big run up high. We did leave relative equal highs here. Price is most likely going to do what after doing this? Probably have like choppy conditions, right? Probably generate liquidity for then what? A bullish move back up after hitting our higher time frame key level, right? So that's just something you have to be watching out for if you are taking shorts and you are against, bullish higher time frame order flow. Is that lower time frame order flow is most likely going to be generating liquidity, right? Now there are times, of course, where we'll be in a super clear like lower time frame sell model where it is okay, but your stop loss is most likely going to be like low resistance liquidity, like areas like that. But yeah, that's what we do. Then, and it usually again doesn't happen during time frames are extremely important. Sorry, like time with sessions is extremely important. So be paying attention to like 10 a.m. to 11 o'clock. Be paying attention to 1 p.m. to 3 p.m. right, and like 11 o'clock to 12. Like what are we doing during that time, right? Because it will always affect the next session. And then you can see like how fast the move is. Like this move happened in under an hour, when this generation of liquidity took about 2 or 3, like about 5 hours for this generation of liquidity to happen, and we took it all out in under like literally under like 30 minutes. Like, so that's like the moves you'll get when we have LRL. There was a 30-second IFG at 11:30. Dude, there was no IFG. I'm telling you, bro. I was looking for longs. 30-second. Yeah, no, there was nothing. Oh, like over here. Did we hit a 5-minute here? Oh, we did. This isn't bad. Not bad. Yeah, but usually like trades like this, you're getting break even. Like very often not, you're getting break even on like trades like this if you're break even at internal high with just like a simple pullback and like this, versus if we do something like this, then this is gonna like more discounted. But like taking trades this premium with like the break even method, it's usually not even worth it because you're gonna get break even. Can you go over how you analyze stacked fair value gaps and how you know if it's reacting off of the top one only to continue lower? Yeah, that's a good question. So when we have like multiple fair value gaps in a leg, let's show an example. Alright, whatever. But when we have multiple fair value gaps in a leg, right? Let's say we have one here, one here, one here. The main thing I'm looking at is equilibrium and premium and discount, right? So oftentimes when we have multiple fair value gaps and you can just draw out the range, right? So you can draw out the low to then the high. I'm not looking to take longs off of the one that is extremely premium, right? Now there are times, of course, when we have like 2 5-minutes and the second 5-minute isn't really even at equilibrium, but it's still like more discounted than the top one, right? It's more discounted than at least like this premium 5-minute. And I will never take like a long off of like a 5-minute that is like that premium, for example, here. And I'll 9 times out of 10, actually 10 times out of 10, wait for the lower one to get hit at minimum here. Obviously, your best entry is going to be at equilibrium, just risk to reward wise. But the market is very rarely going to react off like the top one unless we're like literally like 2 points away from like a draw on liquidity. Then the market's going to like react off that first like 1-minute gap or whatever. But yeah, don't be trying to like take trades with, for example, we have like 2 bullish gaps, and you should be waiting for at least the premium one or the discounted one to get hit. And be just mark out your range by literally using like your fib. And also overall, bro, since we do trade inversions, right? Since I trade inversions, it's not like I'm taking a trade and I'm putting my limit order there, right? A lot of the times with inversions, we have a pullback and then we have our entry confirming. That's the point of inversions. You're getting a confirmation, right? So you're not getting the best risk to reward by having a limit order here, right? But you are getting a better win rate since you are getting confirmation that this idea down here was right. Does that make sense? So it's more about not so much all the time we can do predicting, right? We can predict that probably price will like to trade towards EQ, the range, right? Usually that's what price likes to do. But sometimes we're going to be super bullish, sometimes we're going to be super bearish, and price won't do that. And we'll get the confirmation that price won't do that through an inversion, right? So I don't know. At the end of the day, it's not something that I know for a fact, right? But it's something that I know will give me a better risk to reward, right? But will I know for a fact that we're going to trade down to a discounted 5-minute just because I want a better risk reward? No, the market's going to do whatever the fuck it wants. Bro. Like, don't ask me, dude. Actually, I have no clue. It's so annoying. I understand continuations the most, where we invert a 5-minute and then another 5-minute opens up. And we get inversion out of that. And mech models, would you suggest then? Yeah, 100%. Like, whatever you understand, guys. Like, if you don't understand inversions or if you don't understand, like, mech model or whatever, and you just, trade continuations and that makes most sense to you, trade that, dude. 100%. I trade inversions because it just makes sense to me the most. You might like trading, I don't know, for valley gaps or whatever. Trade whatever makes sense to you. I've been taking any trades this week, and the only one I took was the Tuesday long. What happened Tuesday? Oh, so you did take a trade this week. Oh, you wanted to take was a Tuesday long. Got you. No, this week has been super unfavorable, bro. What? This week has been super hard with entries. Like, it's been like 0 entries this week with anything. And just conditions in general. I mean, Monday we had... What? Monday was just Monday. So this is the price action on Monday. Tuesday we had FOMC and PM. So AM session's going to look like this. How are we going to catch this? You can't. Unless you caught this. This was actually really clean. Yeah, this was pretty clean. But, nah, bro. Other than that, like, literally nothing, dude. Unless you trade, like, PM. Like, PM's been pretty good, but... Yeah, bro. Alright, I'm taking 2 trades this week, dude. Exactly. You will be rewarded, 100%, dude. There are so many fucking weeks where I literally take 2 trades a week, and I take 1 trade a week, take 3 trades a week. And then there's weeks where I'll take fucking 10 trades in a week, bro. And there's setups that are presenting itself constantly, and I'm just going crazy. And I'm rewarded that time, right? So it's just like waiting for that, and you'll get rewarded, bro. Patience pays at the end of the day.
Alright, well, I'm ready to get into some shit.
Alright, bet. Well, that was the first part of this video, guys. This is talking about recognizing market conditions.
Recognizing these nuts in your mouth.
Now we're going to recognize some more market conditions by...
Some more balls in your mouth.
Balls in my mouth. Peace out.